The hardest thing there is to do in trading is knowing when to enter those trades. What is the correct area where you should be entering your trades? Because you understand the whole concept when it comes to market structure, the higher highs, the higher lows, the uptrends, the downtrends. You know how to do that. You also understand the time sessions you're supposed to be trading, the most volume, the lowest volume. You get that. And you also understand your entry signals, bullish engulfings, bearish engulfings, reversal patterns. You understand all of that. You just don't know when to click that button and where to mark off a zone to where you can click that button. In this video, I'm going to walk you through how I find my areas of interest to enter every single trade. This video is meant for those people who understand everything else in trading, but you're just missing this one concept as far as marking off your entry zones. Before we get into the video, make sure you like, comment, and subscribe, because comments just help me understand what you liked and what you didn't like. Liking a video shows me if you liked the video, and if you did like the video, this allows other people to see the video as well. And then when you subscribe, you're not missing any further content that's coming to the channel. So enough talking. You didn't come here to hear me talk. You came here to find your area of interest. Let's get into the video. All right, when it comes down to marking off support and resistance, this is where it starts. The structure of the market. You don't need fair value gap, order blocks, liquidity. All those extra terms is making trading harder. In my humble opinion, trading is already hard. You don't need to overcomplicate it with all these extra terminologies. It's simple. We're going up or we're going down. It's a break, retest, continuation. So this is the beginning of it, structure. And this over here is what we're going to be talking about, finding support and resistance. But I have to just make sure you understand structure. When it comes down to structure of the market, the trends of the market, truth be told, there's only two types of trends. It's an uptrend or a downtrend. People may look at this and say, oh, well, you still have consolidation. Yes, you have consolidation. Price moves in a sideways manner. But in this quote unquote consolidation, we're still able to identify which way the market is moving. If it is still in an uptrend or if price is still in a downwards trend. Quick recap on structure. And if you don't know what structure is and you want a deeper detailed explanation, I did a video talking about structure of the market, how to identify structure, so on and so forth. Now, the important question is, how do you find your support and resistance? Well, after you're able to identify your structure, what can we tell off of just structure alone? Well, every time price forms some type of break past our low, price has the retest of this low that was recently known as support, now getting treated as resistance. So if I take this away, what just happened? Price gave me a break of my lower low. We can now mark this off as my new lower low. And then after price formed this break of structure, I can mark this off as a area of interest. Why? Because we saw price give us a break past this recent known support, and if we're above, we treat it as support, which means what? If price breaks below, I want to see that same area get treated as resistance. And then as we see the rejection with more confluences, we find our entry and then we continue to ride this trade. It's the same thing as a bullish trend. As soon as price gives us a break past our recent higher highs, we mark it off like so. We have the higher low, our higher high, and the last break of structure being here. As soon as we see price give us that break of structure, we can mark our zone off like so, look for the retest of this recent known resistance level, treat it as support, and then continue towards the upside. And that's simply support slash resistance, resistance slash support. The easiest way to find your key areas of interest. And if I delete this and we move over towards the left, this right here, it may look complicated. It will only look complicated to those who don't know what time frame correlation is. Time frame correlation is how we use the daily, 4 hour, 1 hour, 30, 15 minute, and the 5 minute time frame to then catch our setups. I have a Discord where I post my full strategy. If you like the way I trade, if you want to learn more about how I trade, I recommend going and joining the Discord, link in the description. But right here, we see when we're catching a trade flowing with the market, I only use the daily, 4-hour, 30, and the 15-minute time frame. The daily and the 4-hour, it's mandatory that we are in sync, because once we're in sync with these two time frames, I will be able to identify my area of interest. Looking at it from the daily and the 4-hour, trading with the trend, we have a bullish example, we have a bearish example. Like we just talked about, what can we identify structure-wise? Which way the market is heading? Are we bullish or are we bearish? Well, starting with the bullish example, we see that price form this high in the market, and then once we form this high, we see that price has recently broke past these higher highs, which means what? The last low point that presented us with this break of structure happens to be here, which will also be known as our higher low, since we are in a bullish trend. Well, as soon as price gave me this break of structure, I know price is going to form some new highs. So I can then take this off like so. I can mark my recent break of structure off like so and look for what? The retracement back down towards this area of interest. And then once price starts to form the retracement, we now get left with the high point in the market, which we can then mark off as our higher high. And now look how we easily just found the resistance slash support. I will then look for price to reject from here to then look for the next continuation back towards the upside. But as price is showing us the retracement back down, again, keep in mind, I want the daily and the 4-hour to be in sync. Now, when it comes down to finding my entry zones, this is when I would use my 4-hour time frame. The zone where you're looking to take your trades off of, now we use the 4-hour time frame to do so. This is just helping us to identify where's the break of structure, where's our higher high, where's our higher low, and where could price possibly retrace to. Well, now you do the same exact thing on the 4-hour time frame, and on the 4-hour time frame, it's the same concept. We see price form our high in the market around here, being our higher high. We then see what? Price gives us a break past these higher highs. Would 0.1 or 0.2 be my higher low? It would be 0.2, because this is the last low point that presented us with this break of structure. It wouldn't be 0.1 because at this low point, we don't have a break of structure. Price has a push, a pivot, a retracement, a pivot, and then the next push. But on the first low, we don't get the break of structure. But on the second low is where we get this break of structure, which now we will mark it off as being our higher low. Now, what can we mark off? Would 0.1 or 0.2 be our area of interest? It will be 0.2, because if you remember, I am a simple break, retest, and continuation trader, meaning I am looking for the last break of structure for price to have the pullback to and then have the continuation. Well, if I'm looking at the 4-hour time frame, my last break of structure or last structure break inside of the overall continuation move will be here. We have the break of our highs being here, which shows us the break of structure, but the last structure break inside of our trend happens to be here. So now we can mark this off like so. And what would I be expecting? I would be expecting price on the 4-hour to have the retracement back down towards that last structure break, which allows us to mark this off as our higher high. And what this will look like on the daily time frame would be something like this. We still have our daily break of structure being here, which will look like this on the 4-hour time frame. But what you're seeing, and what's most important, is that on the daily and the 4-hour time frame, we are both in sync with the uptrend structure. And as we're in sync with this uptrend structure, we can see that the daily break of structure and the 4-hour break of structure are both in sync as well. So the moment the daily is having the pullback to retest that recent break, it allows the 4-hour to have the pullback to retest that break of structure as well. And after the added confluences, we will then look for our entry to then ride this trade back towards the upside like so. And then it's the same thing on the bearish trend. We identified this point as being our low. We identified that we have a break past our lower lows, which means this is our lower high, because this is the last high point in the market that gave us that break of structure. And after we saw the break of structure, we can then mark that last structure break off like so. And now expect price to have the retracement back towards this zone, which allows us to then mark this off as our lower low. If we move towards a 4-hour time frame, the same exact thing. We see that the break of structure occurred around here. We then have the last high point in the market that presented us with this break of structure. That presented us with this break of structure be here, 0.2. It wouldn't be 0.1 because this last high point, it did not present us with any break of structure. This last high point presented us with the break of structure. So the moment this structure break happened, we can then mark this off as our lower high. And now, where would be our last break of structure? 0.1 or 0.2? It will be 0.2. This is the last structure break overall. Yes, we have the overall continuation move happen here, but the structure inside of our bearish trend happens to be here, which makes this the last structure break. So now I can mark this off like so. We know that since both the daily and the 4-hour time frame are in sync, we can adjust this to now be in that 4-hour zone. But we know that now we have our 4-hour zone marked off, which allows us to adjust this on the daily time frame. We see that the daily structure break happens to be here, marked off like so, and we know that this also, since we are in sync with the daily time frame, will look something like so. And as we're expecting price to form the retracement back towards this area of interest, we can expect the same thing to take place on the daily time frame, which allows the break and retest on the daily time frame, which also allows the break and retest on the 4-hour time frame to then have the rejection with added confluence to now continue this move towards the downside. And I'm about to show y'all an example on how to find your areas of interest as you're dealing with the candlesticks in the market. This is just an example of trading with the trend. I'm also going to show you an example of trading against the trend, aka counter trend trading. So give me a second so I can pull up a previous trade that we took in the Discord. I call out the Discord, all the trades and everything I call out in my Discord, and we take those trades. So give me a second, I'm about to pull it up for y'all. All right, y'all, so I pulled it up in the Discord. You can see on May 30th, go back here, we can see May 30th, USD CAD top left. Go back to the Discord, USD CAD, I click the picture, USD CAD, you can see our entry. And then if I scroll down, y'all can see the aftermath of that trade. Again, USD CAD, boom, USD CAD, and then we hit target. So this is going to be the first trade we talk about, which is our winning trade for around 3.24% in return. And then we caught another similar trading opportunity around here as well. All right, so on the daily time frame, what was I able to identify? Well, at first I saw price trending in this bearish trend. We had a low, we had this pivot, we had the break of these lows, which now we mark this off as our lower low. And then we have the retracement, the continuation, the break of structure, going from a bearish to now bullish trend. And as we mark this off, we see that what happened? We see that this break of structure took place. We can now mark this off as our lower high. And we saw this as being our recent break of structure. Well, on the daily time frame, I'm able to identify now that I'm bearish on the daily, which is good. And after we perform this break of structure, I then mark this off as my daily area of interest, looking for price to have the retracement back towards this zone, recently treated as support, find rejection, and then have the continuation back towards the downside. But as soon as price gave me this break of structure, this is when I went towards the 4-hour to see if we were doing the same thing. On the 4-hour time frame, you can see that same thing take place. On the 4 hour, we went from this bullish to then bearish trend due to the break of structure taking place around here. But the last structure break, as we went from bullish to bearish, happened to be around here. Now we can mark this off as our new lower high on the 4 hour time frame. And then we see the last break of structure, which is why I drew out my box tool like so. And if I look towards the left, we can see this last break of structure get treated as support. So I'm expecting when price is above, we get treated as support. Looking towards the left, that is exactly what takes place. And then when price breaks below, we use resistance, continue. Break above, use support, continue. So now, what can we see? We see that the daily and the 4 hour time frame are both in a bearish trend. Well, if we go back towards the Discord, we go to the playbook strategy and we look at this. What can we see? Trading with the trend. I know that my daily and my 4 hour are in sync. I've already identified my trends. Now, how can I find my area of interest? Well, like we just talked about, finding your area of interest is just the last break of structure. So as soon as we saw this last break of structure on the 4 hour, this is when I marked it off with my box tool. Now, what can I expect? I can expect price to have the retracement back towards this recent break of structure, which also allows the daily time frame to pull back into, giving us the break and retest on the daily time frame, which is also allowing us to have the break and retest on the 4 hour time frame. And if I fast forward, what takes place? We see price have the extension, now form a clean pullback towards this recent break of structure, performing the break and retest. And as soon as price tap back into on the 4 hour, if I go towards the daily, we see that the daily is doing the exact same thing. The break and retest, one of the daily structure, but ultimately giving us that ability to pull back into that 4 hour zone. Now, when it comes for entries, what is the most important rule? One, I want to make sure that I'm below my 4 hour zone. Obviously, when we're above, we are treating it as support. So I don't want to sell when I'm above a support zone. I want to be below. So one, I want to be below my 4 hour zone. And I also want to be below my daily zone as well. Why? Because if we drag this out towards the left, again, looking at price on what's happening when we're above these two zones, when we're above the 4 hour, we're buying. When we're below the 4 hour, we find rejection as resistance and then sell. But when we're above the daily, we are buying towards the upside. So it's important to now be below my 4 hour and below my daily, since both time frames are in sync towards the downsides, and I'm looking for sales. I don't want to sell above my zone because price can easily have some type of push, find support, and then have the continuation back towards the upside. Because of what? Because price has already treated this area as support before when we're above. Pay attention to recent data and you won't be confused. So now we just wait for price to get back below those zones. As you can see, price broke above, we're treating it as support. Price now has these beautiful selling pressure, the beautiful selling pressure step in, which gets us one below this 4 hour zone. Now we can see price potentially treat this area as resistance, which we do here. And then price has the rejection and then the next push getting back below our daily zone. And as soon as price got back below this daily zone, look what takes place after we break below this strong area of support. Price has no problem hitting our targets based off of us just looking to take sales below these key levels of interest. And then again, if we pay attention to where we found this area of interest, look how price respect that zone. Look how price respected that zone to the point where we find rejection as support. We find rejection as resistance, and then it granted us with the next push back down towards the downside. Simple as day. That's all I did. I simply looked to see if my daily was bearish. I then looked to see if my 4 hour is bearish, and if both time frames were in sync, I'd use my 4 hour time frame when the daily and the 4 hour. Again, if we just go back to the Discord, when we are trading with the trend, when the daily and the 4 hour are in sync, I use the 4 hour time frame to find that area of interest. And you can obviously see we found that area of interest. Price respected that zone. We found our entry after we got back below both zones, and then we hit targets. with no problem. So now we're about to jump into this trade over here because it's the same concept. I can really just move it. So I can just move this over towards the left, right? And if we just look, right, it's the same concept. If I go back towards the daily, I'm gonna go into replay mode, but I'm not gonna go too far back. So what can we see on the daily time frame? It is the same exact thing. On the daily time frame, I see that this is my lower high. Why? Because this last high point presented me with this break of structure, aka being my daily area of interest. So as soon as price gave me this break of structure, I went towards the 4 hour to see if we were in sync. On the 4 hour time frame, I see the same exact thing. On the 4 hour time frame, we see price go from this bullish to then bearish trend. And as price went from bearish to back bullish, we then went bearish once more, breaking out of these higher lows. I don't mark this off as structure. I don't mark this off as structure, because when I'm looking at structure, a technique I like to use, shout out to my boy FX Alex G, he taught me this, is when we're drawing out structure, we're like a snake. We're following a snake. Oop, the snake made a sharp turn, boom, sharp turn. Would this be a sharp turn? I'm not marking it off as so, because it doesn't drastically take me the opposite direction. We continue, boom, sharp turn, boom, sharp turn, boom. And if you just continue to use this technique, you will then see once price reaches this area over here, this is not a sharp turn in my opinion. So I continue. Boom, sharp turn. This is not a sharp turn in my opinion. So I continue. So now what am I able to see based off of this technique alone? I see that the break of structure happened around here. I have my lower high being here, my last break being here, and I can obviously see my lower lows now being here. And if we just perform the break of structure around here, I can mark this zone off as an area of interest because it's my last break of structure. So now knowing that, we mark this off as our last area of interest, aka our entry level. And if we look towards the left, what takes place at this zone? When we're above, we treat it as support. When we're below, we treat it as resistance. So I was anticipating for price to break, have the retest, treat this area as resistance, which we did not only once, but twice, forming a double top scenario, and then get back below the 4 hour zone and back below my daily zone. Because again, if we just pay attention towards the left at this daily zone, price treats it as support when we're above. We see price have the rejection, have the push, treat it as support because we're still above that daily zone, have the push back towards the upside. We're below the 4 hour. It finds rejection. And then as price is pushing, I found my entry based off of extra confluences. And then when price breaks back below, we go and hit targets with ease for 2.5% in return. And again, we go back towards the Discord. I can show you this trade we called out. This was back on April 9th. So we go to April 9th. You can see that trade here, USD CAD. Boom. Dang, I didn't send no updates, but boom. You can, oh, I didn't catch this trade. But we did call out this whole entire move. Look, I'm not in this trade, USD CAD on the 9th. You can see right here the same thing. This is the 30-minute time frame. We go to the 30-minute time frame for you all. This exact same thing. So 30-minute, 30-minute. Same thing. So yeah, we called both of these time frames out, well, both of these trades out using the simple break and retest, making sure that price is below those zones. We find our area of interest, and then you just ride the trade. It's just simple as day. There's nothing more. It's nothing extra. I'm simply just using market structure. Market structure alone is how I catch my trade. This is going to be part one of finding your key entry zones, because now when it comes down to counter trend trading, aka 4 hour, the 1 hour trading against the trend, blah, blah, blah. We're looking for the 4 hour and 1 hour being synced, so on and so forth. This is a whole different ballgame. This is where time frame correlation comes in. Don't get me wrong, you still need time frame correlation with trading with the trend, but with counter trend trading, you really need to have that understanding of what time frame correlation is. And if you don't know what time frame correlation is, you're in luck. I made a video talking about time frame correlation right here. If you want to check that out, please go back and watch this video. You will have so much more insight when it comes down to how to implement each given time frame to better your trading. It is so simple. It's like counting to 2. 1, 2. If you don't believe me, go watch it. That's all I gotta say. But we're not going to get into counter trend trading just yet. I really want y'all to go watch that video. And after you watch that video, check out part 2 on finding your key areas of interest. This is part 1, talking about the Florida market, how to find your areas of interest, and wait for part 2. Part 2 is going to be amazing. It's like counting the 2 on your fingers. Anybody can do it. But I'm gonna show y'all a little glimpse. So hold on. All right, so again, this is trading with the trend, right? We have this. If I move this over like so, now you have counter trend trading. I forgot this is gonna pop up, but let's just ignore this. Don't look over here. You have your counter trend setup, which to some of y'all, this might look confusing. I already know. This is why we're not talking about it in this video. So like I said, stay tuned for the next video. Let me know what you think about this video, and if it helps, hey, that's why I'm here. That's why I even made this video, because I want to help y'all get better at finding your key areas of interest. And now when it comes to taking the trade, if you want to learn more on how to capitalize with this strategy alone, please, by all means, go to the link in the description, join the Discord family. In here, I talk about my plan. I have my strategy itself, aka the playbook, psychology, helping you through your trading psychology, some tips about trading, live webinars, post-trade breakdown. I even made a Forex curriculum. This talks about Forex in general. What is Forex? The type of trader you want to be, time sessions, currency pairs, what is a pip, so on and so forth. If you want to learn more about that, if you want to do a little bit more digging inside of my plan itself, join the Discord. The link is in the description, and let me know what you think. Enough of that. I'm going, and I'm going to catch y'all in part 2 of finding your key areas of interest. Deuces.